The next recession will destroy millennials. Millennials are already in debt and without savings, and after the next downturn there'll be an even bigger trouble. So that will be you and me. Now the trade war is dragging on, the yield curve is inverting, and the economy is not going so well. If you're watching this video, then you're probably between 25 and 35 and are starting to notice, already have noticed, the consequences of the last recession. I think it's in your best interest to watch until the end of this video, as by knowing more about what's happening to our generation during the next recession and what's happening to our generation now will help us, you and me, become more prepared during the next financial crisis. Now, investors are fleeing to safety, global growth is slowing down, the stock market is dipping, and the millennials are screwed. Now, recessions are never good for anyone. There's a very bad economy means miserable financial, emotional, and physical health consequences for everyone, from infants to college students to retirees to everyone, more or less. But the next financial crisis, it's not even a question of if it's going to happen, but when it's going to happen. And when it happens, it will hit millennials, so adults between 25 and 35, particularly hard. After all, the last recession never really ended for the millennials. Now, millennials have struggled a lot in recovering after the last financial crisis. So they're now left more vulnerable than older generations, so the Generation X and Generation Baby Boomers. The inflation has been increasingly every year, and in most cases there's not been a matching increase in salary. Millennials are failing to make it to the middle class and will most likely be the first generation in modern economic history to end up worse than our parents. So the next financial crisis will be the final nail in the coffin, and it will stall our careers and suck away from our wages as the inflation rates rise even higher, and at the same time our wages are not adapted to the inflation rate. And the biggest problem is that this will all happen in our prime earning years. So when your career is at the high point and you'll be earning the most, that's when the next financial crisis is probably going to happen. And it's going to have a big financial impact on many aspects of life. So millennials graduates into the worst job market in 80 years. And that did not just mean a few years of high unemployment or a couple of years living in your parents' basements. It meant a full decade of lost potential wages. So maybe you earned some wages, but not the max potential. Now, the generation unlucky enough to enter the labor market in a recession suffers a significant earnings loss, and that takes many years to rebound from. So for kids that have been born between the 1980s and 1990s, have had a new huge financial catastrophic demand on their meager post-recession earnings. And furthermore, you've got $1 trillion of educational debt, and this is a toxic combination of lower earnings and higher student loan, and that balance is combined with tight credit in the recovery years. And this leads to millennials getting shut out of many different markets, including the housing market. As you may know, buying houses is a very important way of building wealth, and the generation of home ownership rate is a full 8% lower than for millennials than for the Generation X and the baby boomers when they were the same age. And the median age of home owner buyers has also been going higher and higher, and it's around 46 now. So the oldest it has been since the National Association of Realtors started keeping records 4 decades ago. So as a result, millennials have not benefited from the dramatic rebound in housing prices that has occurred since the last financial crisis at the end of 2008, where the prices were very low, and the economy has been growing since then. But without the means, you cannot profit from that growth. Millennials have also been forced to shell out hundreds of billions of dollars in rent, as housing costs have skyrocketed in many urban areas. I mean, if you look at the rent prices in, for example, Silicon Valley, they're just through the roof, and many other big cities. So this represents a large generational transfer of wealth from the young to the old. So boomers who own houses and are renting, and also big municipalities, and they're profiting from the rising prices and also getting in these rent checks forked over by younger and also poorer families who cannot afford buying houses. So the cost pressures have also made it difficult or impossible for millennials to save or invest. The share of Americans under the age of 35 who own stocks has decreased down from 55% in 2001 to 37% in 2018. So many people also don't have any savings, and if you don't have savings, you're probably also not going to be investing into stocks or anything else. So this is also partly because employers are less likely to offer retirement saving plans, and in part because millennials have nothing left over at the end of the month to put away. So virtually most millennials are not saving adequately. Experts, 1 and 2/3 of the millennials have zero retirement savings and probably are in debt, which isn't very good, especially for the next financial crisis. This means that millennials have not benefited from the decade-long boom in stock prices since the last financial crisis as they have their parents and grandparents, because they had the financial means to invest after the last financial crisis. Now, millennials are worth a lot less on paper than the members of the older generations were at the same point in their lives. Now the question is, could the millennials make up this lost ground? Can they gain back this financial freedom? Perhaps they could, if, for example, wage growth suddenly and dramatically accelerated to compensate for the inflation. Maybe if cities started building millions of new homes at affordable prices, and Congress announced a new student loan debt jubilee, for example, eliminating debt, because that's something that's holding many millennials back. However, many financial experts consider it unlikely that the millennials will rebound. So millennials missed out on the big asset boom. Financial crisis is looming upon us. Now, with the baby boomers occupying most of the top jobs and much of the housing, millennials are doing less well than Generation X and the baby boomers, so basically your parents and grandparents. So millennial suffering won't just hurt millennials. I mean, it's going to maybe start with the millennials if the young are not here to pump up the asset values of the old. I mean, in retrospect, the olders are always going to be suffering if the millennials are not there to pump up the asset. However, there's one generation which is even worse off than millennials, and that's the Generation Z. But that's for another video. Hope you enjoy this type of content. It's a bit different than what I usually post, but if you enjoy it, then leave a like, subscribe for more content like this, content about blockchain, about economy and so on. So I'll catch you on the next one. Bye bye.